Lululemon stock has fallen 45% over the past year to under $300 a share. At the latest price, Lululemon has a market cap of $35 billion. With just under $2 billion of cash on the balance sheet, the company's enterprise value is $33.5 billion. Revenue over the last 12 months comes to $9.8 billion, with $1.6 billion of net income and $1.7 billion of free cash flow. So Lululemon stock is now valued at 22 times earnings and 19 times free cash flow. That valuation is right at the bottom of the company's historical range at a level not seen since 2017. Lululemon stock has declined this year as investors worry about slowing growth. Management expects growth of 11 to 12% this year, which is much lower than the company is used to. And the most worrying aspect is Lululemon's North American segment, which makes up 61% of total revenue. Growth in that region has slowed from 30% in 2022 to just 2% in the latest quarter. And so the big concern is that consumers are going cold over the Lululemon brand. Bears point to changing demand for athletic leisure and competition from brands like On Cloud, Alo and Vuori. Apparel is historically a difficult area to invest in. Consumers can be fickle and there's no shortage of brands that have risen and fallen over the years. That said, Lululemon still has a number of things going for it. Stable gross margins of 58% point to the company's premium brand and pricing power. The business continues to produce steady free cash flow and has built a strong culture, as evidenced by strong employee reviews. However, Lululemon's most positive aspect is the company's international growth. While US revenue grew only 2% in the latest quarter, the figure in China was 45% and 27% for the rest of the world. These two segments represent around 20% of Lululemon's revenue, but management thinks that can grow to 50% in time. Crucially, the rest of the world segment has much lower margins than North America, so as margins in this segment converge to group margins, we should expect some improvement in Lululemon's overall margins as well. Based on this thesis, I drew up a simple discounted cash flow model that assumes 12% revenue growth for the next 10 years and a free cash flow margin of 15%. Using a 10% discount rate and a 2.5% terminal value, the model points to $30 billion of free cash flow generation over 10 years and a fair value for Lululemon stock of $331 a share. That works out to an expected investment return of 12.4% a year. Investing in apparel is not without risk, and 12% growth may be too optimistic, but it seems foolish to bet against a quality business like Lululemon. That's why I give the stock a bullish rating, but these are my personal opinions, not financial advice, and I hold no position in the stock. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.